It is Tuesday morning. It is my last day for live streaming this week. We're going to be going on a trip, but I'm excited. We had. Sometimes I wish I get on a little bit earlier in the morning because I just marked out some phenomenal setups that just happened. That would have been beautiful. We have this inversion play right here. Worked out beautifully, and then we had a breaker just hit and just exploded higher. We should be hitting these highs right here. So we have some decent price action. Good morning, Matt. Hey. How you doing, my friend? Glad to have you. So I think we might have some decent price action today. I'm going to be watching the market to see if we get any decent setups. Obviously, we're going to be going over our higher time frame analysis. Your mic is a little quiet. How about now? Is that better? Let me know in the comments. We're going to be going over some higher time frame analysis, putting together how we look at the market, what I do every morning. And unfortunately, there's not much analysis that's going to go involved in what we're going to do. But we're going to do it nonetheless because that's what we did. DT Tom, good morning. Good morning, my friend. Glad to have you here. Okay, so I want to give, we got 5 minutes. Those that are here early, you guys get the full benefit of really digging into the higher time frame analysis. So we're going to start with the daily here. But as you can tell, we are delivering from nothing. We're at all-time high, so we really can't do anything on the daily. Okay, let's jump to the 4 hour. The 4 hour, we wicked down into this 4 hour fair value gap this morning. But if we look at the 1 hour, the 1 hour is the pretty one. This is nice. Okay. I'm seeing a play right here, guys. Sorry. Let's pause that. I like this. I like this play right here. Let me finish getting set up. I probably should do that because I'm liking what I'm seeing here. We got 20 seconds. I just want to make sure we don't close. Okay, I'm going to explain why I'm liking this to here and potentially even higher. It's because of this 1 hour sweep. Okay, so look at how we came down we swept this low into this 1 hour fair value gap, which also was a 4 hour fair value gap, which also was a 4 hour swing low. So we came down deep into this early in the morning, and now as long as the setup presents itself and it's not taken out for the news, this is going to be a nice setup. This will be a nice setup. Let me make sure get everything ready here. Shoot. As long as we have some type of entry, the downside is that the close of that candle is going to be the news, or it's going to be open. So opening price is going to be that candle. So that is our only negative thing that we got going on here. Let's see. what I'm referring to is the 5-minute, I believe. So here's the 5-minute candle. So we got beautiful price action. Here's the 5-minute I'm referring to in line with the 1-minute. So that's kind of what I was looking at. If we could get a close of this 5-minute as well as this 1-minute, we would hit these and probably run these highs right here. Let's see. Well, we're not going to get that set up. Sorry, I will get back to seeing if you guys are saying anything here in a second. I just got to get everything set up, make sure I got everything up correctly. All right. All right. 23, MNQ. All right, I think I got everything set up. We should be ready to go. Let's, did I miss anything? All right, nope, nothing. Good morning. All right, there is the news candle. I keep saying news. This is the open candle. All right, good chance we're just gonna blow right through this. Okay. Okay, more than likely because of us delivering from this 1 hour, we had this beautiful IFVG. We also had a breaker that we're respecting. We're respecting a lot of discount PD arrays. We've came into a pretty low discount. I see us running higher. So we're just looking for opportunities. Look at how we made that equal high. I like that. That will be nice for later as long as we don't break it right now. Which it looks like it's pretty volatile. So we're going to hang on. We're going to sit on the sidelines here for a minute or two. All right, do we have, let's look at our regular trading hours. We are really high. At some point, we're going to come and we're going to crash down into this. I expect us to fill this out, okay? So from this gap right here, this is the opening range gap. I always mark this when I can. This is where price closed and where it opened, and there's no trading in this space. So that usually will get filled to some degree. So if we can get this filled here, maybe sweep this low a little bit, that might be interested. I might be interested in taking a long off of that. Okay, let's see, what else do we got? I need my midnight open on here. Throw midnight open up. This will be somewhere around here. All right, here we go. Okay, how aggressive it went through this, I expect we're going to run these highs right here real quick, and probably these highs. We'll hit all-time highs here. All right, see how quickly we did that? And that came easily came because why? We're redelivering from this hourly fair value gap. We swept the lows. Look at that. We swept the lows right here. this low got ran by the 8 a.m. candle. It got ran by the 8 a.m. candle, and we saw as a result discount PD arrays being respected and premium arrays being disrespected. Okay, so what do I mean by that? I mean that this fair value gap is a premium array. Normally you'd want to see this respected and it would deliver lower, but it was disrespected, and then it was respected as an inversion fair value gap, meaning it was respected after it gotten broken through. That's a discount PD array, acting as a discount PD array now. Then we have this low, high, lower, low. We break higher. This now is a discount breaker. This is a breaker in discount. So meaning we want to see it find support and move higher. It did that and it moved higher. Okay? So again, even here at the 929 candle, it came down to this wick and it basically tagged this high almost to the tick, and then it moved higher again. Okay? So this is all PD arrays in price action that we can see that's respecting a move higher. So when you see price action like that, you see a nice models that are being respected and redelivering from a higher time frame fair value gap, you are going to see price move the other way, and in this case it moved fairly quickly. I mean, this is being extremely aggressive. So right now we're just going to want to wait. We just want to wait, and we want to see if we're going to get, we still have this whole yellow box right here. This is the opening range gap that I think will attack. Okay, so if we have the large candle like this and we close below this fair value gap, I'd probably be interested in taking it. Okay, that's a lot of aggression very quickly. It doesn't look like we're going to get it right here, but let's just see what happens with this price. Okay, and we got a swing low here, here, and here, and we have really no clean fair value gaps, maybe a little one right here that we would look for. That's kind of what I'd be looking for right now. Here's a 30-second going to the upside. B plus. Why? Because we're redelivering from nothing. Okay. It's hard to want to be bullish when, I mean, you could easily be bullish here. But as far as my rules, why did I like this long so much? Because we were redelivering from this hourly. Up here, what are we redelivering from? All-time highs. There's nothing up here. So there's nothing that I can have a clear, definitive redelivering. It's not, drawing a blank on the word. There's no clear target that we've attained to give me the confidence that we are going to go one lower, but also we have to use that same logic for a long. If we have no clear target, but it's all-time highs, every time I hit all-time highs, I'm thinking, well, we hit all-time highs. That could be the target. I don't know. So that's what I was talking about yesterday. All-time highs is very difficult. It's much easier once we get away from this range, once we get away from this space right here. But I think we're going to run lower here. This is Actually, I like the way the 30-second looks, but I think we should run this. 22 seconds. I don't want it to run without me here.
Order filled.
I'm already entering this because of how aggressive this is, guys. If we don't continue lower right here, I'm just going to close the trade because that was a very aggressive candle. It grabs some of the lows, and I'm not going to hold it through it.
Order submitted. Order submitted.
Stops move to break even. Probably
Order filled.
Out. Yeah, I got stopped out.
Order canceled.
That's fine with me. I was targeting this low right here. It didn't hit. And it stopped me out at break even. So I'm okay with taking that because the entry was somewhat of a chase because of how aggressive this candle was. So I was expecting that we would hit this low, but we didn't. We just grabbed these lows right here, and then it retraced enough to hit me. So it'll probably hit right here. If I had a better entry closer to this inversion, I probably wouldn't have been stopped out, and I would still be in the trade with my break even sitting right here, looking to grab this low here. Now, if it doesn't, the reason why it wouldn't is because we have Powell testifying at 10 a.m., which is in 20 minutes. So we could see no continuation as a result of that. So this was probably a B plus setup that I took, targeting this low but we only grabbed this one here. And we grabbed it on that first candle, so that made it even less attractive. I was in about right here, so I was in drawdown for a little bit. Main reason why I liked it is we had this nice market maker buy model, and I wanted to get in as soon as we closed below that, targeting just this low right here, which is the beginning of the market maker sell model. We completed it, so it was a little bit of a chase. It didn't work out, but got out at break even. Yeah, just commissions. Do we at all times on ES? Okay, so we hit all-time highs on ES as well. No SMT for us right now. I don't know what happened there. All right, let's settle down here. Matt, you DM'd me. I'll check it out. So right now, what are we waiting for? We're waiting. I'm going to wait for news. We've hit all-time highs up here. We have all-time highs that have been put in right here. Okay, so let me mark that out. All-time highs. Yesterday, we had an inside-out day, which we were up and down, and then at the end of the day, we expanded higher, and then we expanded all the way up here. So this was yesterday morning, and then into the afternoon and to the close, we expanded higher. And then we've been consolidating all night. So this is our consolidation period. Now we're looking for our manipulation. What is going to be our manipulation leg? Could our manipulation leg be higher like we've seen right here, and we see lower price for our distribution? That's our AMD, accumulation, manipulation, distribution. So this is the context I look at the charts every single day. I'm trying to figure out, this is why I took this trade. I'm like, okay, that was very aggressive very quickly, and we're moving aggressive the other direction. We may want to run these lows. Once we have an entry model, let's take that entry and let's target these lows. We didn't get it. We got out for break even, is what it is. But now we're waiting for the news to happen, or Powell to testify at 10 a.m. here in 15 minutes. And we're going to see if we get any type of setups. I really do like my next draw on liquidity is to fill this this opening range gap. I just need a setup to be able to take it. I need a setup to take for this opening range gap. For those that don't know what an opening range gap is, if you toggle on the bottom right hand of the screen, you will see, if you use TradingView, you're going to see the time and then letters ETH, electronic trading hours. If you select that, you'll see an option for regular trading hours. If you click that, it removes all the post-market and pre-market trading, electronic trading, and gives you only trading during regular hours from 9 basically to 4, 9 to 4, or 8:30 to 4. What is it? 9:30 to 4, whatever time it is. And we have this gap that is sitting right here. So this gap will be filled. Typically, the midpoint is what I like to target. And so this midpoint would be the target, or you could either target somewhere around these highs for price to be aggressive and move towards. That's kind of what I would be looking for as far as my next possibility, but I need the market to set up for it, and I probably will wait till news or Powell testifies. Okay? So we have relatively equal lows right here, but I don't have a setup. Okay? So we have to wait for a setup, and I like these equal lows. I like this 1 hour fair value gap, consequent encroachment, and the mean threshold, or excuse me, the consequent encroachment of this opening range gap, the halfway point of this opening range gap. These are all the things that I have on my chart here that shows me that there may be some interest here, some levels that I like. Does that make sense? Do you guys see that? Do you guys see that? What happened? What happened with this inversion gap, or this fair value gap acting as an inversion gap? It failed. It did not go all the way through. Why? What did I say about this all-time high? What are we redelivering from? Why are we going lower? What is the cause of us moving lower? There isn't anything. There's nothing up here. So this is why I'm saying all-time highs is very difficult, because the algorithm will target it or not target it depending on what it wants to do. There's no other indicators for us to watch to see if price is going to actually run these highs. Okay? The only way I'd be interested if we run these highs is if we were aggressive, we sweep these relatively equal lows, and we get a nice inversion gap to the upside, or a breaker, or some type of PD array that I can take a long on. That would give me more confidence that we may run to these highs or close to these highs, because we ran liquidity. There's no liquidity up here. It's just moving higher. There's nothing up here. So when it's running, price runs for imbalances in liquidity. So when there's no imbalance and no liquidity up here, it's hard to say, hey, here's an inversion. We haven't redelivered from anything. Let's take the long to run back up to these highs. That's low probability. Low probability. Got 10 minutes till the news at 10. BF, good morning. How you doing, man? So what am I expecting to do? I'm thinking price is going to go lower. If a gun to my head, as ICT says, we're going to go lower. How are we going to go lower? I'm not sure yet. I'm not sure. I want to see some type of model that I can take to go lower. I mean, it could just start working itself lower and then at 10 just go aggressively. But what I'm referring to is, do I see a model? Do I see one of my strategies showing up in price action that I can participate in that drop lower? That's what I'm looking for. Here's an inversion right here. We should run this low right here. If we close, we got 16 seconds left. It's being a little more aggressive. This, we should run this low. And because there's nothing in between here and here, there's a good chance we run for these. The only unknown is we are not at 10 o'clock yet. We just wicked below this. Let's see what price wants to do now. So this would not have been an opportunity for a trade because of how low it closed here and the target being here for moving your stop to break even. Your stop would have been hit easily, so this is not necessarily a trade, but we can use this as a way to read order flow to learn how price wants to move. So I expect us to run these, I would like us to see run these, but we don't have to. Why? Because we already grabbed a level of liquidity here. It did its job until the algorithm gives permission for it to start moving in one direction. That may be now, it may not be. We don't know. I'm leaning towards no. Why? Because we haven't hit 10 a.m., which there's some news, Powell's testifying, and the market will like to use news events to move the market. And before then, it will do fake out. So people are thinking, oh, it's running, it's going without me. Then it wicks below, does its job by grabbing liquidity, then turns the other direction. Here we go. We grab liquidity on the downside and we have this small inversion. What do we see? What is likely to happen if we close above it? The likely scenario is we run these highs. That is the likely scenario. Why? Because we grab liquidity on the downside, on the bottom, on the sell side. We wicked below it. We swept it. We didn't expand lower. The body stayed above this low, and now we turned the other direction. Now we have an inversion, a fair value gap right here, that if we close in 5 seconds above it, we should run these highs. Now the question is, if we don't, what does that tell us? That tells us two things. One of two things. Either price action is going to be choppy, or it's because we don't have news yet. Okay? We haven't hit, price hasn't been released to start moving, right? But I expect we should hit this high right here. This is just how we read order flow. There it is. So this worked out. That was an opportunity for somebody to do something, because that is just how order flow works. Now, that was only 6.5 handles. I'm not taking those small moves, and it's before news, so I don't take it. Okay, so now we could continue these because there's no fair value gap here. There is this bearish order block that we ran into, but outside of that, we should run these. If we don't, we don't have to. Why? We already grabbed a level of buy-side liquidity, and it could turn the other way. It doesn't have to, but this is how we read price with the inversion gap to see where price may want to move to. Now, we are before news, before Powell speaking, so I'm glad it's actually working out, but it doesn't have to during this time. But outside of these times, that's what we look for. And if price isn't respecting what I'm just describing to you guys right here, it's price action that we shouldn't trade. It's price action we should stay away from. That's the point of reading and understanding how to read price, is to know when and when not to trade. Now, if this can turn into an order block right here, basically if price closes above this, then we should just explode higher. I mean, it's kind of seems ridiculous that I'm saying this now once we have a green candle, but I didn't expect to see this green candle. I was looking at these two down closed candles, and I was looking for a close above it, and my idea was if we closed above it, we should run these highs. Now, if this breaks this high before news here in the next 30 seconds, do we want to take it right being so close to news? I'm unlikely to. You could demo trade it. You could do something. You could tape read it, but less likely. It's against my rules. It's too close to the news. It's just, it doesn't make sense. So let's see if it closes. If it closes above this, we'll take a demo trade long. Okay. It would be somewhere right here. And I'm just, okay, so I'll get in there. This is why we don't take it before news. Okay, here's all-time highs. I honestly don't expect this to hit. I really don't. I really, really don't. Okay, I really don't expect it to hit. Okay, we're 2 minutes before open. 2 minutes before open right now. Or why am I keep doing that? I'm sorry, guys. I'm tripping over my words here. We're 2 minutes before Powell testifies, which, if you don't know who Jerome Powell is, you don't want to be trading while he's talking or testifying. I think his testifying is actually all documented and recorded, and so it's going to be on a piece of paper. That's released. Once that's released, we should be free to trade. So this here, because it's before news, makes this makes it a C minus setup. I would never take this. If there was no news and this was not all-time highs, I would 100% be taking this. Does that make sense? Hopefully that makes sense to you guys. I'm trying to articulate how I'm trading, how I'm reading the market, and actually talking it out loud myself helps me actually follow my own rules. So this trade will become irrelevant as soon as we close below that red line. We have not closed below it. ES just hit all-time highs. We'll see if this, it's 9 o'clock right now. So we have an SMT. If NQ does not give us an all-time high, this would make us an opportunity for a short. Okay, if we have an opportunity for a short, okay, that closed below that. That's why I'm removing it. If we have an opportunity for a short and we don't hit all-time highs, that's going to be an SMT. That's confirmation that we may see some aggressive move lower. Okay. Here's the 1 minute. We have a 1 minute fair value gap here and a 1 minute fair value gap here. Give me 1 second. All right. Now, you see the volatility right at 9 o'clock. I'm going to wait for it to settle down a little bit. I'm going to wait a minute, a few minutes, give it a little bit of time before I actually take anything. Because right at that, it's just volatile. It's wicky sometimes. If you've ever seen CPI, FOMC, you see it just in a matter of a few seconds run 15 handles and then retrace 15, 20 handles. I don't want that to happen. So I'm going to let it work out its jitters, settle down, and then I'll be looking for a trade. So what did I say before? What did I say? We have an SMT right here between ES and NQ. It's irrelevant. It's irrelevant unless we see a bearish PD array that gives us an opportunity for entry. That would be this one right here in my mind. Okay? That, but we also have, oh my gosh, look at this 30-second right here. Redelivering, close this. This is beautiful. I should have got in here. Depending on how the momentum takes, I might see if I can chase this. We grabbed liquidity here. We wicked below this into a fair value gap, and we inverse this fair value gap immediately. Let's see what happens here. Now, I'm a little jittery on this. Why? Because we just had news. This is why I'm not in this trade. I'm waiting maybe a wick down in here that wicks out of it and closes green. I'll take that as a long. I want additional confirmation. That's kind of what I'm looking for that. Kind of want to see how long Powell is speaking for. So Powell speaking, main reason why, and news why I didn't get in this trade, and it's failing right now. This is a beautiful signature in price. Disregard what you're seeing right here. Without news, without Powell speaking, this is what you want to see. That is the trade. That is the idea. Now, what did we do? We inversed this one, and then we just collapsed. This is what's happening when Powell's speaking. It makes it very difficult to trade, and you can't jump the gun. You can't be aggressive because you can get smacked in your face. Because this is a beautiful signature in price. Swept of these lows, inversion of this 30-second, targets here. That's a beautiful signature in price. We didn't get that. It then retraced and then became even more aggressive to the downside. This is what I wanted to see. Why I wanted us to run to here, but I really can't because we just disrespected this one. Why would if we disrespected this one, would I get in the other direction? You could say, well, doesn't that mean we want to go the other direction? Yes, but we also have another thing going on. We have a news event that's happening right now that throws a curveball into all of this. It makes it much more difficult. So I'm going to just wait until Powell is done speaking. We have 1, 2, 3, 4 fair value gaps. Okay. Normally, I would not want to. I'm not going to take this trade because Powell's speaking, but I'm going to use this as education. We have the signature and price again. I only like one fair value gap being in here. So you have two options, right? We have equal highs here that make this very attractive here. Equal highs with an inversion, a quick inversion is license to disregard these fair value gaps that are sitting right here. I'm not a fan of doing it very often, but if you see very aggressive price action, it should blow right through them and run for the equal highs. If you go to the 1 minute, the 1 minute doesn't have those equal highs, right? So it's not as, it doesn't give you as much clarity. This is the 2 minute. There's nothing on the 2 minute. It just looks like it's just going to consolidate in here. But as we can see, price has not closed above that. So if we would have closed above this in just 1 or 2, 3 candles, then that's an aggressive move we might start seeing towards these equal highs. As the longer it takes for us to break this, the less likely you should be interested in it. Okay? If we start seeing 5, 6, 7, 8 candles, that becomes, I'm not interested in that anymore. Okay? It looks as to me order flow is moving the other direction. I'm not getting any type of T-Man. Good morning, my friend. Hey, okay. I need some type of feedback here. There's a few of you on stream. I'm chit-chatting away. I'm just talking here about the market. Is what I'm sharing with you insightful on order flow? Give me some feedback. Give me some feedback here. So there's the close above on the 30-second, and here's our equal highs. But with Pal speaking, it's just, I'm not going to take anything like that. Mags, great question. Do PD arrays get violated a lot? The answer is yes and no. It's just unpredictable at times. Sometimes they work. You'll take a trade and like, this is amazing. Look how much it ran in a short period of time. Other times it will do the absolute opposite. You think it should keep going and it doesn't. So it is very hard to do those kind of things. So this is Pal speaking. It has to be. I mean, the aggression on this is insane. We literally inversed this. We ran the equal highs, and then we went to all-time highs. But we have Pal speaking. I'm just not going to do it. Very helpful. I have a lot to learn still about when a trade idea is invalidated. That is very important. And when you determine if a trade is invalidated, these are your own rules, right? For example, if these equal highs were left right here, right? These equal highs, that would invalidate my trade idea right here, okay? Let's talk about this. Let's talk about rules and invalidation of trade ideas. For my inversions that I use, which I got from Daji D, which credit goes to him. I got it from Ryan. We have equal highs here, and we inverse right here for these lows and these lows. But because we have equal highs, that would invalidate my idea to go short. but did the short work? Absolutely. That would have been a beautiful trade. So invalidations does not mean that the trade doesn't work. Invalidations are a set of rules that you're willing to abide by so that you protect your capital. Because we're in the industry of capital preservation, right? We have to preserve what we have and build and add on to that. So the rules that you set are rules you're personally setting, and if things go in your favor when you have those rules, that's why you have them. If they don't, you have to dust it off your shoulders as, you know what? I am more grateful for the protection this offers me than the missed opportunities I'm seeing. You have to emotionally get to that place, because if you're not, you're going to see these things happen. You're going to be like, oh, I'm just going to take it. Look at it go. And then it runs against you. You get burned. And now you have a loss of some kind. Does that make sense? Hopefully that makes sense, guys. So right now we're looking at the 30-second. Beautiful trade off of the 30-second. Nice. Obviously we didn't take anything. I'm still looking to see how long Powell is speaking for. Let me see if I can find him here.
Got slapped with the most expensive July 4th on record, with a cookout this year costing on average 30% more than it did just a few years ago. I call that hogwash. What's worse is that this administration doesn't want to learn a lesson in economics. Instead of reducing the push for more spending and more regulation, they only simply double down. Let's take, for example, the tens of billions of dollars of student loan forgiveness. Constant new plans to forgive more money, regardless of the constitutionality of their decisions. So it's important to ask, who are these billions of dollars of forgiveness actually benefiting?
I'm not going to stay on here very long, guys.
The answer is simple.
I want to see
this forgiveness scheme will result in debt relief for 750,000 individuals from households with an average income of $300,000 or more. And just don't forget the fact that the average American family has a household income around $74,000. So what we're doing with this unconstitutional student loan forgiveness is actually asking the median household of $74,000 per household to bear the burden of forgiving debt
15 minutes.
For students who live in households of over $300,000.
We'll mute this.
And the actual
T-Man took a small long on the structure shift after London low was swept. TP at the equal highs. So I'm done trading live. Way to go, T-Man. That's great. I'm glad to hear that. Really, guys, the more people that are successful in trading, the better it is. I mean, it's better for the industry. I believe ICT's Concepts has brought new insight, fresh information, and fresh eyes onto trading that I think is going to be very good for the industry as more traders become profitable. And that's really my goal, is to help people become profitable in their trading. So that's why I'm doing all this. Okay, see these relatively equal. See how smooth this is right here? I don't like that. I mean, that will be ran. So you see stuff like this, and it's like, okay, if I see a setup, maybe we grab the highs. Maybe we run these highs. We go like this. And then we have an inversion. We come into the inversion again, and then we run those lows. Those are the types of things that I look for. I see this, and I'm like, oh, that's a draw on liquidity. When can I get in for that? Right? Sometimes when it's just me and I'm not having I don't have my copied accounts, I'll look for just momentum, and I'll take trades based on order flow, and I'll take 4, 5, 6 handled trades to grab this liquidity, because this is obvious to me. We will hit that. So something like this, I'm not taking it, but you see a candle like this, we have a higher probability of running these lows right now, as long as order flow, we have an order block that we've respected. We already hit all-time highs, so I would say we're going to hit these lows right now, right? So I'm reading order flow to see just where can I take some quick scalps on just one account, not copying anything, and then I reserve my copied account for A++ type setups, okay? Now, if we make another low, that's like, wow, okay, well, we should be running this low. That's what I'm looking for, something like that. We got even more, that's probably more accurate right there. Right, so you just look for different scenarios, and as you sit on the chart long enough, it just becomes obvious to you that, well, we're going to run that. And you don't try to hold for, a giant move. You just get in and out for a small handle, for a small, 2, 3, 4, 5 handles, and you take it and you walk away. Hey, way to go. Breaking a losing streak is huge. It's huge, because when you can break it and you can build that confidence that you can start getting out of drawdown, that's so helpful. All right, so now we just wicked. See how it just wicked? I would be out of that trade, because it just barely swept, and now it's like, oh, well, it may just want to run the other way, just barely sweeping it. I'm looking for a little bit of a stab through it to grab some liquidity. Do you see how even just that small little stab? I mean, you guys maybe not be able to see it online. All right, look at that. See this tiny little stab right here? We stab through these lows that are sitting right here, and then we went the other way and grabbed liquidity. That is all it needs to do. This is the algorithm doing its job, running liquidity, running the other way, grabbing more liquidity, running the other way, grabbing more liquidity, and filling imbalances. That's what price is constantly doing over and over and over. See, it sweeps it, acts like it's going the other way, and then now we're going to get a push through here. And see how it wicked back up? That's why you're only selling on those small little pushes when you're doing liquidity runs, right? When it's stabbing through liquidity, I'm just grabbing 4 or 5 handles to grab that, and I'm out, right? No, this is a 30-second chart, man. So I'll try to maybe I can put that on my charts, because I'm not saying that quite often enough. Does it give me the watermark? Can I remove some of this watermark? All right, I can't. So this is a 30-second chart. All right, let's see what we got here. Is he still talking? All right, yeah, he's still sitting there, guys. Pal is still sitting there, and now he is talking. How long ago did he start talking? He started talking 2 minutes ago. 2 minutes ago was right here. That's where price started moving, right before this moving. So let's just see what happens here. Here's the 2 minutes ago is right here. So this is a 1 minute time frame. I'll try to be more clear, Robert, when I'm changing them. but my right screen is always is either a 30-second chart, 1 minute, 2 minute, 3 minute, or 4 minute. Typically, it's going to be a 30-second, 1 minute, or a 2 minute chart. Those are predominantly the 3 time frames that is on this one. My left one, the left one you see right here, this one is a 5 minute chart. Typically, I can see that it's sitting on the 1 hour because I was doing some higher time frame analysis for you guys. But typically, it's going to be a 5 minute or a 15 minute. 5 minute or 15 minute. I don't know why these words are so small. Let me make the text bigger here. I want bigger text here as well. Make it a little bit easier to read. All right, we already grabbed the liquidity here below this this 1 minute. This would have been also a 2 minute. So you see this 2 minute fair value gap, no opportunity here. It just closed below it and ran. Powell's still speaking, so we can get some crazy type of price action. Okay. This is what I'm talking about. Slightly annoying because I want to take some of these trades, guys. I mean, I just don't want to just sit here. I mean, I enjoy sitting here chatting, but it's like I want to take, when you see trade after trade after trade, just gets a little annoying. You can use indicators that show small font what time frame you're on. Would you mind dropping that, BF? Dropping that in the chat. I wouldn't mind. If you know what it's called or something like that under indicators, I'll look for it and I'll see if I can do that, because I want to make the viewing experience more enjoyable for you guys. Way to go, BF. Way to be done. I don't trade ES. I really focus on NQ, and I've just learned not to be emotional in trying to chase things. I don't know what the setup looked like. Did we get a close on there? No, we didn't. Did we get a close on the 30-second? Oh no, that's not right. Did we get a close on ES? So we got no inversion set up here. We did grab liquidity here. That would have been a trade right there. The close of the 1024 candle on ES. That would have been a nice scalp for, would have been 2.5 candles. 2.5 candles. Handles, I should say. So we filled this volume. We filled the 1 hour. We filled the 1 hour, and we came into the halfway mark of the opening range gap. I would be interested in some longs. Is Powell still speaking? I'm assuming he is. Yeah, he is. Son of a gun. I was not on this chart in time enough. This would have been a nice trade to this high. 8.5 handles. Your stop would be moved to break even. Maybe you didn't take it because you want 10 handles. I wouldn't have taken profit. I would have waited for a 10 handle win. So my stop would be to break even right now. And now I'm waiting to see if price actually wants to hit my 10 handle target because it already did grab liquidity, so we need to move our stop to break even here. So there's the stop to break even. All right, let's drop to the 15-minute. Let's see if we have 55 seconds for the 15-minute to close. This is going to be our first indication of a market structure shift. Okay, right here in 45 seconds, if we close below this low right here, this is going to be a CISSD, a change in state of delivery. If we have this candle close in 30 seconds, that's what I'm looking for, and then that will give me opportunity to start looking for more shorts. That's a clear indication that we're changing directions. Oh, is my computer frozen? Okay, no. Okay, so we closed below it. Now we can go into a lower time frame and we can see if we have any opportunities. So this is our breaker on from the 15-minute time frame. It's a change in state of delivery. It's also a breaker as well, but we have, what do we have sitting right here? We have equal highs. So I'm expecting price to come back into this fair value gap. I would expect price to come up into here. That's the 30-second. Let's see if we have anything on the 1 minute. 1 minute still relatively equal highs we have here. Nice large fair value gap there as well. So I want to see if we can get some type of retracement up into here, and that will give me a further indication to go short. But this is our first indication that prices are going to go lower. This on a higher time frame. I'm talking 15, 1 hour, 4 hour. The close of the 15-minute candle below the high candle tells me that we have a change in the state of delivery, that we are now moving the other direction. Now you might be saying, well, that's obvious. Look at this giant drop right here. Yeah, I'm talking about further drops, and now I can confidently look for shorts. That's what I would be doing. I'm confidently looking for some type of short setup. We have a high, low, higher high. This is still, like I said, the breaker on the 5 minute. It's right in a nice fair value. It's in a fair value gap. But we also have this fair value gap sitting above it as well. There's reasons for it to come back up here, and I'm willing to be patient to wait for price to come up here so I can go short. BF, you say that's the indicator. Are you saying it's called time frame? Is that what it's called then? By 2 degrees. that's not what I wanted. All right, we'll get that here in a second. I'm seeing price move up here. I want to keep track of what's going to happen in price here. I really want to see price come up into this level. Powell is still speaking, but it looks like the market has slowed down unless he says something crazy.
Order filled.
I really want to see it reject this level very quickly. If it's going to stay strong, I'll cut this trade short. I'm treating this as a turtle soup. I want this body to close below these levels.
Orders.
I'm going to take 10 handles right there.
Order filled.
I like that drop. I'm going to just take that. Let's see, did I get that 10 handles that I wanted? Yes, I did. Yes, I did. Yes, I did. Look at that, my friends. That is a win for me. Okay. That's all I wanted. I was looking just for a 10 handle retracement off of hitting this fair value gap. Also a breaker. we really can see price. Here, I'll give you my executions on this trading. There's my executions. So I got in there and I sold down there. Okay, just looking for quick 10 handles because Powell's still speaking, and it was what I wanted. I had my trade idea of coming up in here and getting some type of retracement. We did that, so executed on, got in at 27.23 and sold at 7.12.50. 11 handles. Okay, there's my win for the day, guys. So one and done for right now. I got stuff that's happening later on today. I think what I'm going to be doing, guys, is I'll try to record my trading for the rest of the week, and then I'll upload those on YouTube so you guys can we can stay kind of in touch. But I'm going out of town. We're going to be doing, my wife and I just celebrated our 17th wedding anniversary here on Sunday. That was 2 days ago. So yes, this guy has been married for 17 years, got 3 children. And we're going to celebrate. We're going to go do like an Airbnb, or what would you call it, bed and breakfast out in the country, about a few hours away, taking our kids to go see some cousins. So we're going to do that. We're going to have some fun doing that. Downside is I can't trade. I can't trade during those times. I'm not even sure if I'm going to have Wi-Fi, solid Wi-Fi for me to do some trading. So that is it for me today, guys. If you like videos like this, if you like doing the live streams, consider liking. I would really appreciate it. It helps with it. Helps with getting the exposure, and the more exposure I get, the more people, the more it makes me want to do these and add to the other things that I want to do as far as education, as far as courses, as far as the community goes. So I would really, really appreciate that. Also, I want to say somebody used my code, my code for Apex. I want to say thank you. If you're on here and you've been using it, honestly, it doesn't cost anybody anything to use it. If you're already using Apex and you want to just use that code because you appreciate these free live streams, I would greatly appreciate it. It means a lot because these are no cost to you. It doesn't cost anything extra. But it just a little extra something that says, hey, these guys, they appreciate the value that I'm bringing to the table as far as commentary on the market. So if you do, my code's up there. Everything is 80% off of the Apex eval accounts. Other than that, guys, thanks for being here. We will see you here probably next week. So next Monday will be my next live stream. If I have an opportunity to do something on my phone, maybe, but I'm not, there's no guarantee in that. So thanks for being here, guys. Have a blessed day.